Okay, so Assalamualaikum. My name is IZZATI. Firstly, I will present about the introduction of the accounting fraud. Next, I will also explain about the relation of the terms to the study cases. Okay, so the first one is tone at the top. In auditing, tone at the top can be defined as the commitment of being honest and ethical of the company management and board directors' leadership. Management and the board of directors are responsible for setting the tone at the top for ethical behavior in the company. Okay. Based on the Satyam Computer Services Limited, the company management did not comply the terms of tone at the top. This is because tone at the top is about the commitment of being honest and ethical. However, due to these accounting fraud cases of Satyam, it's been that company management is not complying with the term at all. The chairman of Satyam himself was doing the fraud by manipulating the company's accounts, and it was definitely not an honest and ethical thing to do, which definitely not complying the tone at the top terms. Next is about asymmetric information. Asymmetric information is commonly referred as information failure in auditing. This thing occurs when one party to an economic transaction has more in-depth knowledge of the relevant subject matter than the other party. The frauds in the Satyams occurs due to the asymmetric information between the companies and shareholders. The company surely has much more information than the shareholders, so the company takes this chance to commit fraud. The company manipulated the revenue to the investor and the shareholders to make them believe that their company is a successful company which generated high earnings every year. The third one is the role and responsibility of boards of directors. Based on the agency theory, the roles and responsibility of board of directors is ensuring that the agents act in the principal's best interest. The agent that been mentioned is the CEO of the company itself, and the principals is the shareholders of the company. In Satyam's fraud cases, Raju was trying to ensure the principal's best interest. He's trying to ensure it by cover up the error and recover losses of the company. He did it to make people believe about the company and gain more stakeholders. However, they are no longer fulfill their role and responsibility since they did that to fulfill their personal reasons and not for the sake of the company. Despite of doing the fraud for the sake of the company, it is indeed unethical things that should not be done by the board of directors or the company management itself. The fourth one is about the human biasness or the personal interest. According to agency theory, personal interest occurs when an agent acts in her own self-interest and not according to the interest of the principals. This will cause the agency to gain losses rather than gaining profits. As stated before, the fraud that being done by Raju firstly because of the company itself. He did the fraud to cover the error and recover the losses of the company. However, as the time passed by, Raju doing the accounting fraud for the personal interest. Raju was too great for wealth, power, rivalry, achievement, and reputation, which the outcome is the continuous fraud for years. He even says that doing fraud is like riding a tiger, not sure how to get off without being eaten. Last but not least is about the fiduciary duty of the board of directors. The relationship between a fiduciary and the principals or beneficiary on whose behalf the fiduciary acts is referred as fiduciary duty. The main fiduciary duty of the board director is the duty of loyalty. The interests of the company should come first for those who make decisions within the organization and not on their own. Avoiding transaction with a conflict of interest is the simplest approach to fulfill this commitment. This case has shown that Satyam Computer Service Limited was violating all of the fiduciary duty. Mr. Raju was driven to ride the tiger out of greed for money, power, rivalry, success, and status, which resulted in a violation of every obligation placed on them as fiduciaries, including the duty of care, the duty of negligence, the duty of loyalty, and the duty of disclosure to stakeholders. The case of Satyam is indeed a case of breach of fiduciary duty, which the fraud was caused by humanization and greed. This is also caused by the intense competitions and the needs to impress the stakeholder.
Assalamualaikum warahmatullahi wabarakatuh. My name is FARIHAH binti Muhammad Nasir. Next, I will explain briefly about the case of Satyam Computer Services Limited. Up until 2010, the Satyam Computer Services affair was the biggest corporate fraud in India. The founder and directors was found fabricated financial records, fraudulently raised the share price, and embezzled huge amounts of money from the business. Most of the money were used to buy real estate for their own goods. Problems in Satyam begin when its chairman, Mr. Ramalinga Raju, in a surprise move, announced a 1.6 billion bid for two Metas companies, which are Metas Infrastructure Limited and Metas Properties Limited, saying that he wanted to deploy the cash available for the benefit of investors. Mr. Raju's family has promoted and managed the two businesses. However, he was forced to retract within a day after receiving negative feedback from investors and the market, and share prices fell by 55% due to worries over Satyam's corporate governance. The members who were mainly involved in the case are the chairman himself and other board members. For many years, Satyam accounts showed profits that had never existed and cash at the bank that did not exist, which inflated the share price. They also discovered that the accounts also showed $3 million of salary payments to people who did not exist. Mr. Ramalinga Raju, the CEO of Satyam, resigned on January 7, 2009, admitting to manipulating the accounting of 7,000 rupees crore in a number of ways. According to reports, the business world in general was surprised and scandalized. Later, a single charge sheet containing all of the charges from the discovery phase was created. Mr. Ramalinga Raju was found guilty on April 10, 2015, along with 10 other individuals. Okay, so next, who is the whistleblower for this case? Whistleblowers started to be heard after the real estate market crashed in 2008 and the money disappeared. The controversy came to light as a result of Mr. Raju's failed attempt to utilize Satyam to acquire a real estate firm. India's Metro Man E. Sridharan was the initial whistleblower in the 14,000 rupees crore Satyam scandal, which has now placed the company's former chairman, Mr. Ramalinga Raju, in jail. According to a letter he had written to then Planning Commission Deputy Montek Singh Ahluwalia. In September 2008, Sridharan wrote a letter to Montek Singh Ahluwalia, the deputy chairperson of the Planning Commission, stating that the Andhra Pradesh government's decision to make 296 acres of prime land available to the developer for private exploitation was like selling the family silver. Sridharan was referring to the Hyderabad Metro Rail project, which was awarded to a group of companies led by Metas Infrastructure Limited.
Next, I will present about the pressures, opportunities, and rationalization of those perpetrating the fraud. First one is pressure. Pressure in fraud committing can be classified into two, which are either from personal financial pressure or pressure from superiors. In these Satyam cases, the main pressure that led to the fraud is due to the competitive pressure. Satyam company is under pressure to widening the revenues gap between the competitors. In this case of Satyam, Raju gave his justification for inflating revenues in the latter. He stated that as the promoter held a small percentage of equity, the concern was that poor performance would result in a takeover, thereby exposing the gap. Thus, to cover up the poor performance of the company, Satyam misled the market and stakeholders about the financial condition of the company to increase investments in order to accomplish unrealistic goals and make money. Next is about the opportunities. Opportunities in frauds refer to the reasons or any circumstances that allow the fraud to happen. In this case of Satyam Computer Service Limited's accounting fraud, the main reason or the main opportunities that allow the fraud to occur is because of the weak internal controls. It mainly started with the company itself. This is because Satyam Computer Service Limited is a family business. This means that Satyam family members held significant influence despite their potential incompetence and lack of experience. It surely causes a negative effect on decision making and management of the business. Next opportunities in this case is Satyam's internal auditing. Satyam's inadequate internal auditing system was unable to identify the rising fraud, which led to the accounting fraud for years in the company. Next is regarding the external auditors of Satyam's Computer Service Limited, which is PricewaterhouseCoopers (PwC). PwC was legally responsible for the numbers because they authorized and signed Satyam's financial statements. The auditors didn't appear to carry out independent validation with the banks where Satyam claimed to retain deposit, which turns out to be the opportunities for Satyam to simply do the accounting fraud. Furthermore, the only set of corporate governance regulation in India at the time, Clause 49, did not contribute to the development of a transparent environment. Minority shareholders in India at the time were completely unaware of their rights and the methods by which they may exercise Satyam's company. Last but not least is rationalization. Rationalization can be defined as an individual's reason for committing fraud. Based on the Satyam cases, the fraud was started by them in order to cover up the losses of the company and also to cover the mistake. Initially, Raju only committed fraud to cover up the error and recover losses, but as the year went on, a little discrepancy between operating profit realized in reality and that recorded in the books of account forced Raju to continue his fraud. The rationalization here is Raju is actually doing the accounting fraud for the sake of the company itself. But, however, when a few years of doing this fraud pass by, it turns out to be for the sake of personal too. Then, after a few years of doing the accounting fraud in the company, the fraud became unmanageable. And that is when Raju confessed all the fraud that they have been doing. Raju once says that doing fraud is like riding a tiger, not sure how to get off without being eaten.
Assalamualaikum. Hi, I'm Siti HUMAIRAH. I will present the consequences, effect, penalty imposed to the auditors, company, management, shareholders, and any relevant parties. Firstly, for the auditor, the author in the Satyam case, CBI continued preferring to depend on hard copies provided by the mail or courses. Similar to this, in the case of Fortis Enterprise, the auditor had internet access to the company current account balance and a direct confirmation from the banker regarding of necessary pro forma information. According to the CBI, the auditor in the Setma case relied upon regarding bank confirmation letters supplied by the other courses while the according statutory audit and neglected to check the company current account balance online. According to CBI, the balance derivation the auditor made while reviewing the Satyam account demonstrate their underlying conspiracy with the other important evidence in the accounting scam. The agency added the both auditor paid to head of finding of the system process audit terms that had identity several items system according to the fancy. Additionally, according of the agency, both auditor paid no head of finding of the system producer audit team, which identifying several item account dependencies. The system process audit teams at the SATAM had warned both Prince Westhoff auditor that this deficiency of significant in natural with can affects the genuinely of the financial statement of the company and hence relevant cannot be placed in on the IT system contract according to CBI's findings. The CBI's claimed the auditor had participated in the plot but withholding information regarding with the segmentation in the signature. System control flaws from the company auditor commit as exposed to this. The auditor also mispresented to the auditor commit that system control defensive are inefficiently. Secondly, the effect for the company. The Indian government initially started an investigation, but not only minimally, but got involved very directly. To save the company, the government appointed a new board director for SATAM with the goal of selling with 100 days. The board met right away with the bankers, accountants, lawyers, and the government respectively to develop a selling strategy. To sell the company as soon as possible, the board directly hired the Goldman Sachs as an individual's capital. It is a big capital capitalizes in 2008. SATAM value was 36,600 rupee. The scam hit SATAM was required a tax measured a year later for 58 rupee as a share, given in the market worth more 5,600 rupee. The stock, which had hit all the time highest for 542 rupee in 2008, crashes to unbelievable 6.30 rupee on January 9, 2009. The day Boss Raju made his confession. After reaching a high of 544 rupee in 2008, SATAM stock fell to 11.50 rupee on January 10, 2009. Its lower level since March 1998. On the New York Stock Exchange, SATAM stock reaches the highest of $29 on 10 January in 2008. By March 2009, it was trading about the $1.80. SATAM shareholders suffer $2.28 billion, about 9% in US loss as a result. Mr. Raju had acquired the forensic breach of trust and criminal conspiracy, among of the things. Following the SATAM dictated by PwC participant, the investor grew apprehensive of PwC clients, resulting in a drop share prices in roughly 100 firms regarding for 5% to 50%. The announcement of the scam, which was soon leaked to the anonymous, causes the anxiety in the Indian stock market, with the benchmark Sensex index falling for the 5%. SATAM stock has dropped by more than 70%. Next, the effect of the management. The system value and procedure used to the government and company collectively are referenced as the corporate governance. There are offer institutions on how the business should be run or managed so that the goals and objective can be achieved in the way they increase the company value and is ultimately advantageous for the stakeholders. The board of directors, management, shareholder, clients, staff, and society will be considered stakeholder in this situation. The company management takes on responsibility of the trusted or the other parties. A balanced, fair, ethical business operation, the key components, a good corporate governance. It essentials a commitment to run a company ethically in accordance with the applying laws and to be incompatibility to all shareholders. For the investor, including the foreign investor who would consider investing in the company, good corporate governance is one of the most important criteria. Company with a good reputation can access capital of less than money. All shareholders should be should given a voice and opportunity to participate in general meeting as a result of some corporate governance. Stakeholder instantly, including of the non-shareholder, must be considered. All board members must be enabled by set ethical guidelines of making decision. The key of a registered shareholder trust should be a business transparency. After the cases, the company have issue with trusted from the other companies and other investors to invest in the company. Next, the effect on the shareholder. Surhayanaraya Raju, the younger siblings of the Ramalingga Raju, owned 4.3% of the Maftas Infra when the Andhra Pradesh State CID conducted a raid of his home. They found 112 sale debts for various land purchase and development agreements. Senior partner S. Gopalakrishnan and Sivinas Tolori of Prince Waterhouse Coopers and auditor company were detained for their alleged involvement in the Satyam scandals. They were arrested by the state CID police on suspicion of fraud and criminal conspiracy. The special all-out Satyam's government appointed 6 members of board's management to save the company for 4 months after its founded. B. Ramalingam Raju admitted to falsifying the books. The board chose Valtuberry Consultants, attached Mahindra subsidiaries, as the winning bidder after the global competitive bidding process was launched on March 2009, with a starting price 58 rupees per share. The company law board approved the transaction. As the result, Taj Mahindra, which owned of 31% stake in the Satyam, purchased the company, renamed it Mahindra Satyam on the 21 June 2009, and replaced its executive board by electively Vinay Vanya, the CEO of Taj Mahindra, and the CP Gunangi, a head of international operation, as vice chairman. Next is the any relevant parties effect. The Confederation of Indian Industry established a task force to recommend reform in the wake of scandals. A corporate governance and ethics committee was established by the National Associate of Software and Service Company, is led by Navaya Mutus. The committee made recommendation for charges to end audited commits, shareholder right, and whistleblower policy. Considering the voluntary adopting for international financial reporting standard, the appointment of chief financial officers by auditing committees based on qualification, experience, and background, the rotation of auditor every 5 years so that familiarity does not result in the corporate malpractice and mismanagement. CBI's commit in the Disclosure and Accounting Standard published a disclosure paper in 2009. The following voluntary guidelines for the corporate governance are released by the Ministry of Corporate Affairs in 2009 are the independence of a director, the role of responsibility of audit committees, the role responsibility of the board's company, whistleblower policy, the separation of office of the chairman and the CEO of ensure independence, a system of check and balance, term and condition appointment of directors such as their tenures, remuneration, evaluation, the issues of formal letter of employment, and the placing limits of the number of the company which is an individual can be direct. In 2010, CBI amended the listing agreement to include the provision dealing with the appointment of the chief financial officers. A corporate governance after Satyam scandal has to be in conformity with the amended Companies Act and the other guidelines. This scandal has also exposed the role of dishonest external auditors and has forced the government to provide for the check and balance.
Next, what is the conclusion that can be made from the Satyam Computer Services Limited case? From June 2000 until the scam was revealed, Satyam's records were examined by PricewaterhouseCoopers, or we call as PwC, a major international auditing firm. PwC received harsh criticism from a number of critics for missing the scheme. PwC was legally responsible for the numbers because they authorized and signed Satyam's financial statements. The auditors didn't seem to implement their own independent checks with the banks where Satyam claimed to have deposits. Additionally, the fraud went on for a number of years and involved the fabrication of both the income statement and the balance sheet. The 2009 accounting scam by the founders of Satyam is the evidence that the science of ethical behavior is affected in great part by human greed, desires, and passion for power, money, fame, and glory. The requirement for excellent performance based on solid business governance, morals, and accounting and auditing standards is extremely needed, has been made clear by the scandals. The Satyam case emphasizes the need for securities regulations and corporate governance in developing countries. In fact, the Satyam fraud motivated the Indian government to strengthen corporate governance standards to prevent occurrence of similar frauds in the future. Large-scale financial reporting frauds need to be investigated for takeaways and best practices to reduce the frequency of frauds like them in the future.
Lastly, what we learn from making this assignment is, regardless of the outcome, the Satyam episode that rocketed India, that information technology sector offers many lessons for the no company and the government will be forget in the hurry. One of it is the wise assume that the person is honest simply because he is a vocal about good practices, has a foundation of does a good work, has won awards, or a founder of the company with a name like Satyam, which really mean truth like Sanskrit. Firstly, from the cases, we learned that the examiner should do all the incurrency. The Satyam fraud scam started out of the very modest before ballooning into the $276 million white elephant in the room, since the perpetrator believed that the minor adjustment here and there will make a significant difference and less likely to be noticed. Many fraud scams do it in the facts start out small. This conveys a message of nominous business that is important to investigate any discrepancy in account balance or apparently slight hit or slight incurrency. It is simpler to spot irregularities of misappropriated funds when tasks are distributed among a team of people. Furthermore, fraud and damaged reputation reflect poorly not only on a company but also on entirely sector of the company and nation. India's largest corporate scandal in the recent memory puts a further foreign investment into the Asian third largest economy in jeopardy and casts a shadow over growth of its once burgeoning outsourcing sector. The rupee fell and the Bombay's main benchmark index fell 7.3% because of the news, sending India equity markets into the tailspins. India competitors will not be securitized by the regulated investor and the customers because of the Satyam scandals. Moreover, the Satyam case does not want an illustration of why corporate governance need to be improved. All the publicity traders company must be experienced cautious when choosing their top executive and the managers. These individuals set the tone of the business. If there is a corruption of the top, it will inevitably filter down, separate of the CEO and the board chairman's role as well. Thus, dividing the role help prevent the scenarios like the one of the Satyams. The Satyam Computer Service scandal made ethical behavior more visible and demonstrated how it's related to corporate culture. The founder of the subtype engaged in fraud, which is evident in the signs of conduct, is largest influenced by human greedy, ambitious, and desire of fame, money, power, and glory. And the chairman of the Satam, Billy Graham Raju, was wrote on 7/2009 is about the scandal was, it was like riding a tiger not knowing how to get off without being eaten. Publicity amid to the cooking of company, booking of several years as stand for 7.136 million of rupee and rocking the faith of investor, media, especially of India information technologies.